Welcome traders to this new market review for week 12 for Nasdaq futures. So we dive into last week's price action, but first let us take a look at the economic calendar for last week. So on Monday we started the week with three 8:30 a.m. news events: core retail sales, general retail sales, the Empire State Manufacturing Index. On Tuesday there was no high or medium impact news. On Wednesday we had the main news driver for the week, which was the Fed funds rate release, which came out at 4.5%, exactly as the previous one and as forecasted. On Thursday we had 8:30 a.m. unemployment claims and the Philly Fed Manufacturing Index, and at 10 a.m. we had existing home sales. And on Friday we closed the week with no high or medium impact news. So on the right side we can see the daily chart, and on the left side we can see the hourly chart. So we started the week with a green candle, as you can see over here on the left, with a huge run towards the upside. On Tuesday AM session we had a huge decline, taking this short-term low created on Monday. On Wednesday we had pretty much consolidation going into the Fed fund rates release. After that, price traded towards the upside, taking Monday's high and Tuesday high. Note that the right one, Tuesday's high, was lower than Monday's high, so this was a high probability target for price action, and you can see that on Wednesday we took out the buy stops above these relative equal highs. On Thursday we had a huge drop during London lunch, traded towards the upside, taking these relative equal highs over here, and price continued towards the downside. And on Friday we had a beautiful run as well. So previous week, as we can see on the right side of the chart, we created this SIBI on the daily chart. So let's write that down for now. SIBI on the daily time frame. And as you can see, Monday we opened at 19,668.25. We traded above the SIBI and closed above. And during the rest of the week, the SIBI functioned as support, as you can see on the right side of the chart and the left side of the chart. So diving into the 1 minute chart, forgive me for the blue shaded area. I don't know why it's shaded like that and how to remove it, so we have to do it with that for now. So if we go to the 1 minute chart, what happened on Monday? We opened the day with consolidation, manipulation towards the downside, going into the 3:30 AM macro. That's where we created the low, and pre-market we traded towards the upside. Buy side delivery was next. Measured from this candle's low to this candle's high, we're already talking about more than 160 handles within just below 4 hours. So that's pretty amazing run if you ask me. So the longs were profitable. And as you can see over here, this is the opening bell. We had these relative equal lows. Price manipulated towards the downside. We had a premium opening range gap of 41.25 handles, which is usually indicative of a high resistance liquidity run unfolding. Note the first fair value gap of the day. First presentation was created at the 9:31 AM candle. We pretty much consolidated the start of the AM session, trading towards the opening range gap consequent encroachment after 10 a.m., taking this short-term low with resting sell stops below. Some further price action towards the downside, and 11:30 macro, if you will, created the low of the AM session, and a huge PM trend unfolded. Yeah, not so not really nice price action if you ask me, but nonetheless you can see that price opened on this down close candle, manipulation towards the downside, trading up, trading towards the downside, failure swing, failure to take out this high, displacement towards the downside, and you could have captured a short over here, targeting opening range gap consequent encroachment. But as I already said, it was a high resistance liquidity run, as you had displacement here, deep retracement, we took short-term low over here, again deep retracement. Let me see. We just fell short of taking out this high, but nonetheless a very deep retracement. And there we have opening range gap consequent encroachment. And note, during the PM trend, we used the first presentation after 9:30 a.m., which is the first presentation of the week. We used it as a discount array as support to send price sky high. So that was what happened on Monday. On Tuesday, we had an absence of higher medium impact news drivers for the day. Tuesday, on the right side of my chart, is the huge down close candle over here. So Monday at 5 p.m. the market closed, let me see, at 19,831.25. And after 6 p.m. we opened with a huge premium new day opening gap to build in a premium. And note, beautiful downside sell side delivery which took place during the AM session. So let's dive into the 1 minute chart. So we pretty much had manipulation towards the upside over here, going into London, the close of the London kill zone. 9:30 a.m. we opened at 19,898 with a premium opening range gap of 81.75 handles. And note that within 1 or 2 minutes of time the consequent encroachment was reached, created the first presentation over here, which was a SIBI. Could have captured a short over here, but yeah, the first presentation wasn't used. And if the first presentation isn't referred to during the AM session, I expect the first presentation to be traded to later in the session or later in the day. Let's see if that unfolded. And as you can see, price pretty much had this sell side delivery over here, huge low resistance liquidity run, fell short of trading into first presentation, so that may be a target for the very next day. But yeah, going into the FOMC meeting of Wednesday, where the interest rates were released, we pretty much went into consolidation prior to that news event. So let's take a look at Wednesday's price action. Okay, on Wednesday, I pretty much avoided the AM session because we had this huge economic news driver in the PM session. So that there was a reason why I was waiting for the PM news release, yeah, to capture trade afterwards. Note, we had huge buy-side delivery during Wednesday, taking Monday's high and Tuesday's high, which were relative equal highs. And we just fell short of trading into the blue shaded area over here, which is a weekly SIBI. Let's look at a 1 minute chart. So manipulation towards the downside, creating an intraday low during London session. Pretty much had consolidation going into the AM session, where we opened with a premium opening range gap of 67 handles, which is pretty decent. Even though we weren't trading this session, it is still valuable to analyze this and learn some things about this. So 9:30 came along on this up close candle, traded up, but we had these relative equal highs intact, created during the pre-market session between 7 AM and 9:30 AM. So price immediately traded towards the downside, created this SIBI over here on the 1 minute chart, which was the first presentation. Note how it was used over here to send price into the opening range gap, consequent encroachment, and even lower to close the full gap and to take out these sell stops below these relative equal lows around 19,745-ish. And note what happened after we took these stop orders and when the full opening range gap was closed. So first green candle over here, small tiny volume imbalance which got immediately rebalanced, and buy side delivery was next. And note what a beautiful run you could have captured during this day, even prior to the Fed fund rates release. So the blue shaded area over here is today's, so Wednesday's first presentation, and this blue shaded area was created on Tuesday. It was the first presentation of Tuesday, and if the first presentation isn't immediately used after forming, I expect that later during the day the first presentation will be used. But instead, that really didn't happen throughout Wednesday. And if that doesn't happen, I know the very next day that this can be a very sensitive price point for price. And note what happened. So between 9:30 AM and 10 AM within the opening range, we created this AM session low over here, trading towards the upside until 9 minutes past 10. Huge downside sell side delivery into the opening range gap high, into the first presentation of Wednesday during the 11 AM macro, and this beautiful busy over here. So multiple things align here. So we have the first presentation, we have the opening range gap, we have a busy over here, we have a bullish order block over here, we have the green candle over here, which is a breaker because low, high, lower low, break through the old high. So here we have a breaker, all in alignment around that 19,800 institutional level, and that's where price found support. And price got sent higher. Note that we left these relative equal highs over here. That's not how IBDA doesn't like to keep these things intact, so these get purged later on in time, which happened over here. And during the lunch macro, we had a huge retracement into these relative equal lows over here, just taken, going into the 2 PM news driver. And you don't need to know the economic calendar, you can just watch your price chart, and there you can see where and when these news events hit the fan. So 2 PM is this huge up close candle. We opened over here, left these low probability relative equal highs intact, manipulated below these lows to take the sell stops below, trading all the way up above the first presentation of Tuesday, huge retracement, and you could have captured a beautiful long opportunity during the PM session. In the final hour of trading, we had a huge retracement into the daily range, And after 4 p.m. we pretty much consolidated as usual. So yeah, Wednesday was pretty much a classic New York session unfolding, where the low of the AM and PM session is formed in the first hour of trading within between 9:30 a.m. and 10:30 a.m. Look over here, 9:44, so that's within the first hour of trading. And the high was created 10 minutes past 3 p.m. So that's the final hour of trading. Yeah, just a beautiful example of price action. Learn how to trade this, get familiar with how price unfolds during the interest rate release, because this can help you in the future to capture some gains on this day. It's actually, as you can see, you had multiple chances to go long. This one being the first one, second one inside the first presentation of Tuesday, and you even got a third chance over here inside this busy and just fell short of trading into this bullish order block. But nonetheless, beautiful low resistance liquidity run, measured from low to high. 374 handles within 1 hour and 10 minutes. Well, yeah, easy money if you ask me. Okay, going into Thursday's price action. On Thursday we had 8:30 a.m. and 10 a.m. news. So on the left side of the chart we opened over here. During London we had a huge sell side delivery, leaving these relative equal highs intact. During the AM session we traded towards the upside, trading into the relative equal highs over here. We took them, we turtle souped these highs, and we reversed towards the downside, trading into these relative equal lows over here. So Thursday was a beautiful day of price action as well. Over here you can see it on the 1 minute chart with a little bit more detail. So we pretty much consolidated during London lunch, huge drop, waiting for the news releases. First news release came along on this doji candle over here, pretty much manipulated towards the downside to trap traders into believing that shorts were the best way to go for the day. But instead we waited for the opening bell at 9:30 a.m. over here, trading into opening range gap, consequent encroachment with a huge beautiful low resistance liquidity run. Note the tiny blue shaded area over here. Let me zoom into this for now. It is a busy of 1 tick, and that is still a busy. That's still a fair value gap, so I have to use that in order to read price action correctly. So what happened over here? We had this intraday high over here, which was also a London high, and beautiful relative equal highs to be purged later on. So we opened, small manipulation, trading into these relative equal lows over here, turtle souped it, trading towards opening range gap, consequent encroachment, had some consolidation around it, trading up, flipping opening range gap, consequent encroachment, opening range gap, consequent encroachment for support, using this busy as support, and boom. Note the accumulation taking place at the opening range gap high. How large was this opening range gap? A discount opening range gap of 183.5 handles, which is pretty insane. So capturing a run over here towards opening range gap, consequent encroachment would have yielded already 90 handles. So that's almost 100 handles, which is our target for the day. Here is the London high taken, and you can see that we didn't continue towards the upside, but rather displaced over here, creating a SIBI, and sell side delivery was next. Note price just fell short of trading into the first presentation over here. But yeah, there were two chances. My main focus is to capture the first run after 9:30 a.m. I'm doing this every single day. Some days I win, some days I lose. Yeah, that's part of our job as well. But I'm more interested in this buy side delivery move than this sell side delivery move, because note how long it took for price. This is 1 hour and 16 minutes, and measured from this candle's high to this candle's low, we are already talking about 3 hours and 45 minutes. So my main interest is in taking this low resistance liquidity run, because within, yeah, let's say 1 hour of trading, you are done for the day, and yeah, you made your grocery money. So that's what happened on Thursday. And last but not least, Friday's price action. You can see it on the right side of the chart on the daily time frame. We had an up close day, but on the hourly you can see it with a little bit more detail. So price pretty much opened at New York midnight at 19,874 over here. Thursday's low was still intact. Wednesday's low and Tuesday's low was also still intact. And you can see that we pretty much opened during London, trading towards the downside, taking Thursday's low, Wednesday's low, and Tuesday's low. Let me see, this one comes in at 19,604.25, and this low comes in at 19,602.25, so that's lower. We took out this low and pretty much unfolded a beautiful market maker buy model where we went from sell side of the curve to downside of the curve. So let's add some extra candles on the 1 minute chart. Again, excuse me for the blue and white shaded areas. I don't know why TradingView is doing this, but yeah, we have to live with that. So over here we have previous day low of Tuesday, March 18, 2025. Going back to the 1 minute chart, you can see what happened throughout the day. So during London, pretty much consolidated, had this manipulation move going into the pre-London lows, relative equal lows over here, displacement, retracement, optimal trade entry, and pretty much trading towards the downside to upset these sell stop orders below the lows of Tuesday, Wednesday, and Thursday. Maybe we can even add the other lows as well. Okay, so this one is of Wednesday, 19, which is this low, and then we have Thursday's low. Beautiful. Okay, March 20. Let's go back to the 1 minute chart. Okay, so 8:30 a.m. came along. That's where price starts running for liquidity, which unfolded over here and which unfolds every day, so that shouldn't be a surprise for you. Sell side delivery, sell side of the curve, taking previous day's low of Thursday, of Wednesday. Note how these levels are used even when the stop orders are purged. So we just traded below the low of Tuesday and waited for the opening bell, which was the green candle over here. Manipulation towards the downside. Wouldn't be surprised if there is any SMT between Nasdaq and S&P or Nasdaq and Dow Jones, or even with the inversely correlated dollar index. So trading towards the upside, opening range gap consequent encroachment was around 19,780. We had a discount opening range gap of 248 handles, which means if you could have captured any long over here, trading towards opening range gap consequent encroachment would have yielded already 124 handles. So that was beautiful run if you ask me, but it was not a low resistance liquidity run, but rather a high resistance liquidity run, as you can see here. Created the first presentation, which was busy over here. Trading up, use it as support. Trading into previous day's low of Thursday. Leaving these relative equal lows over here. Relative equal lows are purged. Trading towards the upside. Just fell short of trading into the midpoint. Leaving these relative equal lows. And you know, when a high resistance liquidity run unfolds, turtle soup is the way to go. So when you're bullish, you're looking for relative equal lows to be purged and revert. And yeah, that would have yielded some gains over here. So this was opportunity number 1. Opportunity number 2 below these relative equal lows. And between 11:30 a.m. lows and the 10:42 a.m. lows, we had relative equal lows, which were purged over here. Just fell short of full opening range gap closure over here. Also note the reaction from the 12 p.m. Macro. We just fell short of trading into opening range gap high. Again, taking this short-term high over here, but again fell short of fully closing the opening range gap. And there we traded towards the downside. And at this moment in time, you already know that price will reprice towards that 19,900 level for a full opening range gap closure. The final hour of trading came along, and boom, there you have it. And where does price stop? Okay, maybe we can take a look at that as well. Going to regular trading hours to get a display of the opening range gap over here from Thursday's close to the open. Note my fib settings. So we have the quarters, which are in 0.25, 0.75 and 0.5 level. Make this one red for now. And I added the 1.25 level, which is a standard deviation level to get a projection of where price will likely draw to. The standard deviation level came in at 19,967.25. Look on the right side of the chart and note that the high was created just some let's say 7 handles above this projection level. I think Friday was a beautiful day of price action. If you take your day from 9:30 a.m. to 16:15 p.m., you can actually see that the low was created in the first hour of trading, high in the last hour of trading. And that happens actually quite a lot. Because if you look on Wednesday, first hour of trading creating the low, last hour of trading creating the high. And I think, oh no, on Wednesday, on Monday and Tuesday that didn't unfold. But you can use it nonetheless, and it can help you in analyzing these markets. So yes, that was this week's price action. As you can see on the right side of the chart, Monday, Tuesday, Wednesday, Thursday, Friday. We didn't have a spectacular week of trading. Pretty much consolidated on the high time frame between this SIBI, which turned into a bullish inversion fair value gap for now, and the previous week premium wick consequent encroachment on the weekly chart. Look at my previous market game plan from last week, and there you can see where this 19,986.5 level is derived from. So that's it for this week's market review. I hope you enjoyed it. I hope you managed to capture some gains this week, and if not, now is the weekend to this is the time to reflect on your mistakes and try to learn from them, and yeah, be better next week. So don't forget to subscribe, don't forget to leave a like if you liked this content. I want to wish you a very, very nice weekend and an even better trading week ahead. See ya!